Following the volatility of the last 2 weeks, the chart is settling down more. Through the use of multiple Fibonacci tools, previous highs offer slightly stronger resistance into the first week of March. So even if more buyers enter the market to produce several more days of green volume at or above 10 million, there can still be a noticeable delay when advancing up towards these extension levels. Meaning if this area isn't surpassed in the next 2 to 3 weeks, more neutral to bearish movement can take place, leading to increased chances of the gap up being filled, which of course is the key boundary price should keep closing over to avoid a further bearish continuation. Next, another popular request, the Nifty 50 index. So far this year, it's mostly been range-bound, though over the last week, there's been a steep incline. So if this track is maintained into the end of the month, closing up towards the 22,400 to 22,900 range can become quite plausible. Yet falling down onto this shallower track becomes a real possibility to maintain the range if 22,100 repels once more. Though a slight bullish advantage in this established range can be maintained, provided the market stays well above the low 21,000 range approaching mid to late March.